Hi, welcome to the video lectures from Shivananda Sharma Memorial RV College. This is an ISR initiative. Shivananda Sharma Memorial RV College is one of the premier institutions run by the prestigious RV group of institutions. We have come up with a unique initiative to engage students at the time of this unforeseen medical emergency caused by the corona outbreak. As a socially responsible institution, we would like to connect academically with students to make good the losses caused. In this connection, I, Gokul C from the Department of BBA has posted a video on the subject Banking Regulations and Operations, and the topic is Principles of Bank Lending. Please watch the video till the end, like, share and subscribe to our YouTube channel, and also share the video with your peer groups. This is the first part of the video lecture. So that is the topic is Principles of Bank Lending. Bank lending in the simplest of terms means providing loans to customers. That is the responsibility of the banker. Where does the banker get the money from? The banker accepts deposits from the public and provides it as loan to the public. Now, what are the different, and there are certain principles, there are certain criteria basis which a bank should be lending loans. So what are those is what we'll be covering in this particular chapter. Loans. What are the different types of loans for which bank would would provide loans? First would be the housing loan. Housing loan is to construct or purchase or renovate your house. Then consumer loan. Consumer loan would be for purchase of any consumer durables like electronic goods, etc., etc. Education loan would be to fund the education of your children or yourself, whether it's in India or outside. And then professional loan is to start up an own business or profession. Then automobile loan would be for purchasing of automobiles, two-wheelers or four-wheelers. Marriage loan would be for the marriage of oneself or his dear ones. Personal loan would be for any reasons which a banker has to be convinced than any other purpose. So these are the different types, and there are new types of loans referring to P2P lending. P2P is public to public. So if somebody has extra cash, he can create a platform and start lending it to people. Then there's something called crowdfunding or online funding, where I have a business proposal, I have a business plan, I put it online, and then there are people who see that proposal and fund for me through online funding. So that is called crowdfunding, which is catching up very much in India. Then borrowing from friends and families is always there, and any other source. Okay, so that is from a customer perspective. Now, as far as a banker is concerned, there are mainly four types of loans that a banker gives. One is direct loan. Direct loans can be classified into demand loans and term loans. So what is a demand loan? Demand loan is any loan which is repayable on demand, and it is generally given for to meet a short-term requirement, and it is repayable within a year. So this is mainly a short-term loan, and the amount would also be reasonably less, and it is given on a need basis. Term loans are long-term loans which are given to meet high financial requirements, and they are generally extended for 5 years or 10 years. It could be for purchase of assets or setting up of a business or whatever. So those are called term loans. So that's demand direct loans. Then cash credits. What is cash credits? Cash credit, if I could put an analogy, it is like having your credit card. What does your credit card do? Credit card, there is a limit up to which you can use a credit card, up to which you can do purchases through that. Same way, in cash credit, a banker provides you a certain limit up to which you can take loans. So whenever there is a requirement on a need basis, you keep taking funds out of that. That is called a cash credit. Next is overdraft. What is overdraft? Overdraft is over and above your account balance, over and above the debit balance of your bank. There, over and above that, there is a certain financial funding which is given by the bank to meet your short-term financial requirements. That is called overdraft. So what does a banker do? The banker will provide you, for example, if you have in your account you have about 50,000 rupees and a check has come in for 60,000. There is an overdraft facility between you and the banker, between the banker and the customer. Then the bank would put that additional 10,000 rupees on your behalf and clear that particular check. But please remember, overdraft should be only for current account holders. It is not available for any savings account holders. It is to encourage business transactions. Last is Discounting of bills. What is discounting of bills? You have a bills receivable, somebody has given you a bill, it is due after 3 months, but you require cash urgently. What would you do? You would discount that bill with the bank. The bank would give about 90% of the value of that particular bill on the very same day on which you discount it. That means it helps you to fund your short term financial transactions. Now, this is in short about the bank lending and the concepts. In the next lecture, we will talk about what are the sound principles of bank lending and what are the criterias or what are the things that a banker needs to take care of as when he needs to give loans to a customer. Okay, thank you so much.